Hello, welcome aboard. Glad to have you here. So we're going to talk about building small accounts quickly. Walter Peters here from Naked Forex, and I'm excited to share with you today. Aboard. Glad to have you here. So we're going to talk about a couple of different ways to do this. So it doesn't really matter if you have like a huge ton of money, risk capital to trade in the markets, or if you only have a little bit. It's easy to get impatient, especially if you've been to that spot where you're beyond break even. So once you're beyond break even and you know you can make money, that's usually when the impatience sets in. In the beginning, when you're just trying to get to the point where you're making money, obviously that took me 4.33 years, but who's counting? That was a big deal when I got to that break even point, because I knew that I knew then that I could make it work, right? So when you start actually making money though, and you break through that break even side, then it gets interesting because you start doing the numbers. You start thinking, well, how quickly can I build this up? You know, maybe you want to quit your job or travel the world or, buy a catamaran. I don't know. I don't know. Get a house in the Hamptons. I don't know. Whatever, help your grandkids get through college, whatever it is. So what I want to do is share with you 3 different ways that you can accelerate the growth of a trading account. A lot of people don't talk about this, or they might talk about one of them. And if this is something that you're really interested in and you like this, then you should definitely look into our new course that's coming out. It's called Small Account Big Profits. That's right. Small Account Big Profits. And you can get that at fxjake.com/big. But anyway, let's talk about the 3 big things you can do. All right. So number 1 is to improve the growth of your account. Obviously, you can just use simple compounding, and you can compound your account at the account level. A lot of traders understand this. So if you're trading, for example, you're risking 2%, and you have a 3-to-1 reward risk ratio strategy, you win that trade, that 2% turns into 6%. So now your account, if you think of your account as 100%, that grows to 106%. So now when you're risking 2%, you're of the 106% account size now, it's slightly more than it was on the previous trade and so forth, right? So that's the account level. There are better ways to do it than that, though, other than simple compounding at the account level. You can, the 3 big ones are basically you can improve your trading strategy, and usually that's going to involve your exit rules or your risk management rules. You can risk more, right? And that would include things like, what do they call it when they keep adding, like every time they have a loser, they double the size of the trade or whatever. What's that called? I'm blanking out on that one, but you know what I'm talking about. It's I can show you examples of this, but when you first get into trading, you'll hear a lot of traders say, well, yeah, I know what to do. I'll risk, $50. And if I lose that $50 trade, I'll risk $100 on the next trade. And if I lose that one, I'll risk $200 on the next trade. And you eventually blow up, right? So that would be one way to take on too much risk, because eventually you'll run into enough losers in a row. It doesn't matter how high your win rate is. You run into enough losers in a row that you no longer have enough money in the account to cover that, right? And the third way to improve, so trade a better system, trade with better risk management, or take more frequent trades. Now, the tricky part about that is that we often end up in a situation where we're actually trading multiple markets rather than multiple systems. So, here's the problem with that. When you trade multiple markets, what will typically happen is you're not diversifying as much as you think you are. So even though you're trading multiple time frames and multiple systems, and I'm all for trading multiple time frames, 8-hour charts, daily charts, 2-day charts, 12-hour charts. I love all that stuff, right? But you don't get the same diversification that you would get if you were doing something such as trading multiple strategies, especially strategies that are complementary. What I mean by that is the strategies that don't precisely fit together. Like they're like when one's up, the other one's down. So like a trend following strategy versus a strategy that does really, really well when the market's in range, consolidation, right? So range bound strategy, or a swing trading strategy versus a trend following strategy, or a breakout strategy versus a reversion to the mean strategy. All of these things add to the diversification, because when one account, when one system's going well, the other one's not, down, and vice versa, right? So let's talk about what's cool here is I can share with you a couple of interesting ways to improve your acceleration of your trading account growth by looking at the right things. All right. And again, before I forget, if you guys are interested in this, certainly you want to check out the Small Accounts, Big Profits course, which is coming up very soon. You can get it on that. And the link is at fxjake.com/big to get into that course, if this is the stuff that you like, okay? If this is something that interests you. All right, so let's talk about it. So this right here, what you're looking at on my screen this is like a Monte Carlo spreadsheet. And basically, I'm saying I've got a 37%, I've got a $500 account. Actually, let's move that up to 1,000. Let's do that. So I've got a $1,000 account here. And then there we go. And then it's got a 37% win rate. I'm risking 2% per trade, and I've got 3 to 1. So for every winner, I make 3 times what I'm risking. Okay, and I don't have any break even or scratch trades here. So what this shows you, the spreadsheet shows you kind of the growth of this account, given that, remember, it only has a 37% win rate. So if we go all the way down here, you can see it gets to an obscene amount of money after a while. But really what I'm interested in is, where does it get after about 300 trades? I think I've got a couple of rows at the top here, so we'll just discount those. I think it's about 302 trades that I really want to look at. So after 302 trades, we're at 16,551, which is not bad, right? On $1,000 bucks, but you can do a lot better than that. Let me share with you the chart so you can see the equity curve here. So here is your equity curve. Let me get my face out of the way. This is actually the first 300 trades, right? So first 300 trades here, and you can see that it's up to whatever it is, whatever I said, $16,551.56, which is pretty good. Remember, you're trading a low win rate strategy, but you're compounding at the account level. That's pretty good after 300 trades. But like I said, you can do a lot better than that. What happens if you tweak the risk? Well, it turns out you can take this exact same strategy, still starting with $1,000. We're risking 2% on every trade, 3 to 1 reward risk ratio, and a 37% win rate. And what do we get here after 300 trades here? Hold on. We're at trade 606. So I need to go back up here to trade 300. And remember, it's the same system, right? It's the exact same system. These are all hypothetical, obviously, no guarantees that this is going to happen in the future. The reason why we run Monte Carlo is to run lots of them, hundreds of them, so you get a sense of what might happen in the future. You never really know. But that's why we build these spreadsheets. Okay, so here, this one's interesting. So in this case, it's actually down to, after 300 trades, it's only up to $8,396, right? So it's basically half the returns. What happens if we go ahead and let's do this again? What I'm going to do is rerun this. Every time I change the spreadsheet, it will rerun the numbers here. So I'm going to change this again and see what happens after 300 trades. You can see here, after 300 trades, we're at, in this case, we're at 48,671. So there's a couple of interesting things about the way that this played out, actually. Number one is that with the first sequence of trades, it was half as good as the original, compounding at the account level. However, once we look at this with a different sequence of trades, slightly more lucky, I suppose you could say, using this risk algorithm, it actually goes up to 48,000. So roughly $32,000 more profit after the first 300 trades. And again, if you have a goal, let's say you have a goal of reaching 100,000, if that were the case, you'd have to wait until you got to trade in this sequence 381 on average for this example. And again, if we change this up, if we change this to, let's say we're risking 2.25%, and we'll get a new sequence of trades every time I change in this spreadsheet. By the way, if you get in on the Small Account Big Profits course, I'll give you all these spreadsheets so you can do all this stuff and plug your own numbers in for your own strategies. But basically, you can see here in this example, we hit 100 grand at 373. It's a little bit sooner than the other example. And after 300 trades, it should actually be 304, I think, on the spreadsheet, because it's a little bit better than the other example too, which was 16 grand. We're at 21 grand here. So not as good as the 48. So you can see how that changes. And what you do with Monte Carlo is you get a range and you go, okay, well, this kind of would be like the worst case scenario, perhaps. This would be the best. So we're probably going to be somewhere in the middle there. And that's how I like to run these. So you run hundreds of these simulations just to get an idea of where you might fall out there. And again, like if we go to this spreadsheet over here, we can do the same thing. We can go, okay, well, what happens if we risk 2.25% on the compounding at the account level? And we do that right here, right? 2.25. And that's what we've got. So now let's see what happens here. We'll have a look. I love this stuff. It's actually calculating now. Okay. So you can see after 302 trades, where are we at? Aha. The 302 trades were actually at 22,722. Interesting, isn't it? 22,000 after 300 trades. And when do we get to 100 grand? Let's see here. Let's say that that's your goal. Like 100 grand is your goal with your tiny $1,000 account, right? So you say, well, how long before I get there? It looks like we will be, the equity curve is a lot smoother on this. So about 480 trades it takes you to get there. And remember, on the other one, it only took me 370. So I basically saved about 110 trades on that one. And I think this is the way to look at it. When you're growing a small account, there's a real temptation to kind of put in a lot of risk, right? But I think what I found is tweaking on the risk management side is better than just going, yeah, I'm just going to risk 7% per trade or whatever. You can do that, but you're going to end up with the wild swings. Even the algorithms that I use, there are still going to be more wild swings with your equity curve. Like if you look at it right here, here's the equity curve here, right? And you can see that it goes flat for a long time here. And then you hook into some nice moves, and it goes flat again for dozens and dozens of trades. Because this is like 1,000 trades here that it takes to. I know it says like 1 million and 10 million, and you won't be trading in the retail Forex world if you're at 10 million. This ain't gonna happen, right? You just can't do it. After 100 standard lots, that's about the max you're gonna be able to get in the retail world. 100 standard lots, which is, that's about it. $1,000 a pip. So you won't get much further than that. So anyway, I just wanted to share this with you. Remember, you can improve your strategy to accelerate the growth of your account. You can change the risk to improve the growth of your account, the risk management, right? Or you can trade more frequently. Those are the 3 things that you can do. We're going to show you how to do all of those in the Small Accounts Big Profit course. You can get that at fxjake.com/big. I'll see you soon. I hope this helps, and I wish you happy trading. See ya. Bye.